So we're approaching the start of 2022, and I'm sure on a lot of people's New Year's resolutions, it will be to invest their money. Now I'm sure a lot of people have seen a lot of videos about the stock market and cryptocurrency market making people a hell of a lot of money. And while in one sense it's good to show what is kind of possible, it's not really the case that this will happen for most people. So just before we get any further into the video, I just want to set some expectations on what you can kind of expect from investing. So first of all, in the stock market, an average return would be considered between 6 and 8%. This can generally be achieved by just investing in the S&P 500 and not having to pick loads of different individual stocks and do loads of different research. Now that's not to say of course it's guaranteed every year. Some years the S&P 500 could be slightly lower, some years it could be higher, but on an average you can get between about 6 and 8% per annum. The reason that people invest in individual stocks mainly is to try and beat the benchmark, which is that 6 or 8%, and most people think they can do that. For example, in 2021 year to date, the S&P 500 is up 26%. So if you were investing in individual stocks opposed to the S&P 500, for example, and you didn't beat that 26%, it just goes to show you it's not as easy as it would seem. And then we take a look at cryptocurrency. This can be very hard to put an average return on because first of all, it's such a new space, and second of all, it really depends what you're investing in. For example, if you invest in Bitcoin and Ethereum, some of the two biggest market caps in the cryptocurrency space, you can obviously expect to see less returns than something that has a lower market cap and does well. For example, a lot of people took very speculative risks on the likes of Doge and Shiba, and it did actually work out, but for every Doge and Shiba there was hundreds of other projects that did absolutely terrible and lost people most of their money. So while personally I think that there should be a portion of cryptocurrency in everybody's investment portfolio, keep in mind this is not financial advice, it really does depend on people's risk appetite. Anyway, let's get back to it. So I've come up with 6 steps essentially on how you can get started in investing. So number 1 would be to first of all understand what the stock market is. Most people don't realize that your pensions are actually invested in the stock market. A lot of people think the stock market is a crazy risky place, basically just like being in Vegas. And sometimes it can seem like that with the likes of AMC and GameStop going on these crazy runs and people making loads of money and people losing loads of money. So it really seemed quite polarizing, as in it's just a huge risk, a huge gamble. And while there is of course some risk involved, I personally don't see it anything like the roulette tables. So for example, the stock market, you're investing in companies. For example, the S&P 500 is the top 500 companies in the US. You're investing your money into them, and in return you own a very small percentage of that company, depending on how many shares you own of course. The idea then is that you think that company will go on to continue to grow their revenues and become a more profitable company, and then in turn increasing your share price. So my first tip is to just do a bit of research into the stock market, figure out how it works, why companies issue shares, why they try to raise money, and then of course the benefits to investors. Now I'm not saying you have to go and do absolutely hours upon hours of research, but maybe just a quick YouTube video that goes over what the stock market is. Likewise for cryptocurrency, this one is much harder to understand but definitely possible. Personally, I would say first take a look at Bitcoin and Ethereum and do your best to understand them before you take a look at any of these other kind of smaller projects. So the second step here would be to understand the risks involved and the best practices. So for example, with the risks, as I said, depending on how speculative you go with your investments, you could end up losing quite a bit of money. As well as that, you should set some expectations for your investment. For example, what I did at the start of this video, basically giving the average annual return in the stock market. And if you end up beating that, absolutely great, but don't be too unrealistic with your predictions. For example, if I started investing now and said, I can definitely make 300% returns on my money this year, while it is possible, you're probably setting yourself up for disappointment there, so definitely set your expectations. And then regarding best practices, things for example as don't invest any money you're not willing to lose. Try leave your money in there for at least 3 to 5 years to allow it to work for you and ensure that you don't pull it out when the market is lower. And then sayings like time in the market beats trying to time the market. So lots of different phrases and sayings and best practices there, but just try to familiarize yourself with as many as you can. The third step I would say is to choose your stockbroker or cryptocurrency exchange. There's plenty of these out there. I'll give a couple of examples for the UK and Ireland. So we have Trading 212 as one of my main options. This is where you can invest in pies, so you can essentially make your own little ETFs. And you can set different percentages there. So let's say, for example, you set something at 20%. Every time you invest €100, €20 of that will go into that specific stock. Trading 212 also allow fractional shares, which is great. So if you wanted to buy €100 worth of Tesla, that's completely fine. You don't need to buy a full share, which Tesla is currently valued at about $1,000. So it makes it accessible to invest in these kind of stocks. A second favorite of mine is Buck0, which I mainly use for ETFs, but they're also coming out with fractional shares soon. And for both of these, I'll have links down in the description below where you can sign up and you can get a free share. Now there's no need to completely tie yourself to just one of these stockbrokers. Feel free to play around with them, see what features you like, maybe try out 2 or 3 of these, and then you'll know which one suits you best. Or what some people like to do is to spread their risk, so in case an app is down for some reason or there's server maintenance or something like that, while it is rare, it's definitely possible. So they may want to have 2 different stockbrokers that they can access one in the event the other one is down. And then when it comes to cryptocurrency, I mainly use Coinbase. I'd recommend this one for beginners just because it has an easy to use interface. But the fees are a little bit higher than something like FTX, which is another exchange I use, for example. This one definitely isn't as user friendly, but the fees are quite low. For Coinbase, you can pick up some free Bitcoin when you deposit, I believe, 80 or 90 euro. So you can go ahead and check that one down in the description below as well. And I'll have FTX down there for those of you that are interested in that as well. So step 4, a little bit linked to step 3, but just go ahead and put a small amount of money, whatever you're comfortable with, into one of these stock market apps and just play around with it a little bit. Buy a stock, sell the stock, do some more research into how you can set maybe limits on buys, mess around with the pie feature on Trading 212, for example. The best way to learn is often by doing, so just go ahead and put a small bit of money in and just play around with it and get more comfortable with it. And then step 5 will be to decide what strategy works best for you. As I mentioned before, a lot of people just go with the, I suppose, passive strategy of investing in the S&P 500 on a consistent basis and don't have to do any more research into different kind of stocks. But a lot of people think they can beat that S&P 500 benchmark and decide to go down the individual stock investing route. There's things such as growth portfolios, dividend portfolios, for example. But just find what works best for you. For example, somebody could go for maybe 60% in ETFs and the other 40% for some individual plays, or vice versa. It's really up to you to find your best style. And I found the best way of learning this is simply by just being in the markets. You'll get a real sense for how stocks are performing and you'll get a better idea of what kind of stock market portfolio you want to build yourself. Step 6 for me, and this is one a lot of people struggle with, and it's just be patient and also be consistent. A lot of people invest money and maybe 1 or 2 months down the line they may have decreased their initial investment and they could pull their money out because they just simply have no patience. Or some people could just expect to see their money have grown a lot more than it did. In the space of 1 or 2 months it may grow 2 or 3% and they may not be happy with that and expect to see big 10x returns. So just be patient, remember your goals and your expectations that you set and just stay consistent with it. And step 7 and the final step will be to familiarize yourself with the different tax laws in your area. Now I do have a couple of videos on this for Ireland, so if any of you guys are watching this from Ireland and want to familiarize yourself with some of the tax laws here in Ireland when it comes to stocks and cryptocurrency, go ahead and check out the videos that'll be down in the description on tax. Anyway guys, that is it. Hopefully this video was of some use to you. I do get quite a few questions wondering how people get started or where to start, so I just wanted to make this video as a guide people could come back to. If you are getting started investing in the new year, I wish you all the very best of luck. Hopefully it is a very fruitful year in the stock market and cryptocurrency market. Anyway guys, thanks so much for watching. If you enjoyed this video, please consider subscribing to the channel and make sure you do drop a like on this video as well. It really does help out the channel. Thanks for watching and I'll catch you in another video.